Todd Rosenbluth from S&P Capital IQ is here to give us some of his favorite dividend ETFs. Welcome, Todd.
Good to be here, Greg. Thanks.
It's always fun having you as a guest. Let's start off with probably one of the biggest of them all. This is the Spider S&P Dividend ETF, ticker SDY. It's also the best performer to date.
Yeah, so what this does is look at the last 20 years of a company's record of paying dividends and have there been increases. And if there have been, that's what ends up in this portfolio. So what you end up having is some cyclical companies that are economically sensitive, financials, industrials, that have strong dividend records. We happen to think a lot of these stocks still have appeal from a valuation and a risk standpoint. So well diversified, but a more cyclical of the four we'll talk about.
And that one's up around 17% year to date. The next one on your list is the iShares High Dividend ETF, the HDV. This is up 13% year to date. So what's the benchmark for this one?
Yeah, I mean, so this one has more of a defensive slant to it, more telecom, more staples, more utilities. Those stocks did well in the beginning of the year and then have sold off. So it matters whether or not you think the market's going to move higher or you think the market's going to pull back more. If you're concerned about a pullback, then the more defensive sectors like we have in this iShares ETF are a good place to hide.
Now, Vanguard is famous for its indexes, built the business, started the whole thing, Jack Bogle and all that. They have the Vanguard High Dividend Yield Index. This is the VYM. This is up around 16% year to date. Tell me about this one.
Yeah, so what this does is look at the highest dividend yielding stocks as opposed to the dividend record. This looks for, for high yields. So you're going to get some good stocks there, but stocks that perhaps have sold off quite a bit and have room to move on. There's a bit of a defensive and a bit of a cyclical slant. It's very well diversified and very cheap. Not surprising with a Vanguard product, but this is among the cheapest of the ETFs that we talk about.
And then finally, Wisdom Tree has been a huge up-and-comer in the ETF business, really growing its asset base. They have the Wisdom Tree Large Cap Dividend Fund, the DLN. Tell me about this one. These guys were big in fundamental ETFs.
Yeah, they are. And so this is among the more fundamentally driven ETFs where dividend is a criteria that's out there. We like this one again because it's well diversified. It's a little bit more expensive than the Vanguard product, but a good number of companies inside that have a growth perspective and yet a defensive slant to it as well. So all these are good options. We think the takeaway is understanding the differences from a sector and a stock perspective and not just the expense ratio.
And they're all pretty cheap, right?
They are. I mean, relative to an actively managed fund, if the most expensive is 25, 30 basis points, you're looking at nearly 100 basis points or 1% for an actively managed equity income fund. So low cost really is a way to go for some of these dividend stories.
All right. Thanks a lot, Todd.
Thanks, Greg.
Thank you for watching The Street.